Of these four ETFs, only one passed the acid test. Arguably, four of the most popular Nasdaq-focused income ETFs are JEPQ, QQQI, GPIQ, and the new kid on the block making waves, TDAQ. Now, we'll cover the basics, yield, income potential, and growth, but that's only the beginning. I'm also going to backtest these funds, compare their maximum drawdowns, and examine one metric that is actually rarely discussed in these comparisons, and that's upside capture. Because a high yield means very little if the fund gives up too much growth or exposes you to more downside than you expected. And that is the asset test. How much income does a fund generate? How well does it protect your capital? And how much upside are you sacrificing to get that income? By the end of the video, you're going to know whether the fund you own or the one you're considering actually passed. By the way, if you're new here, welcome. My focus is strictly on income and covered call ETFs. I have a degree in engineering and I previously worked in investment research. So throughout this video, I will explain to you how these funds actually work, not just read off their yields. Now, if this interests you, consider subscribing. And here's a quick disclaimer for you. This information is for education purposes only and not meant as financial or tax advice. So please consult with a licensed financial and tax professional before making any investment decisions. In this video, I'm also going to do back testing, but please note, past results are not a guarantee of future ones. First, let's take a look at the income. At the time of this comparison, GPIQ yields 9.33%. QQQI comes in at 14.05%. JEPQ is coming in at 12.87%. And the new kid on the block, TDAQ, is actually at 17.1%. So just looking strictly at the yields, right? TDAQ obviously is leading the group. And at first glance, it seems like the easy choice for greater income. And then QQQI would be second best. But let's take a little closer look at some of the other underpinnings. Now let's get into the acid test. To keep this comparison fair, I used the exact same period for every fund, October 1st, 2025 through July 24th, 2026. Now, I chose that starting date because TDAQ launched in September 2025, and I wanted every ETF tested during the same market conditions. And I used QQQ as the benchmark because it tracks the Nasdaq 100, which is the market these funds are built around. And I'm going to be measuring three things. First of all, what happened to a $10,000 investment? Did it grow or did it lose value? Second, the maximum drawdown. So this simply means the biggest drop along the way. For example, if your investment reached $10,000 and then fell to $9,000, that would be a 10% drawdown. And third, how much each fund performed compared to QQQ. Basically, how much of QQQ's upside each fund kept, or how far it fell behind. Same date, same starting amount, and the same benchmark. So let's see which fund passed the acid test. Let's take a look at TDAQ first. And if you had invested $10,000, at the end of the period, you would have ended up with $9,935. So it went down a little bit, but QQQ went up to $11,397 in that same period. Another way to take a look at it is that portfolio return was negative 0.6%. And compared to QQQ, it actually was down 14.6%. The drawdown was 13.3%. So I'm going to share with you a graphical representation of it. And as you can look at it here, the most severe drawdown was actually April 2026. And the green line represents QQQ, the blue line represents TDAQ. So even though they both had a drawdown in that period, you can see that TDAQ had a more severe drawdown. Now let's take a look at JEPQ compared to QQQ. So again, same exercise. Had you invested $10,000, you actually would have been up by $76, not life-changing. However, it definitely did better, right, than TDAQ. And taking a look at the total portfolio return, it's rounded up, but it was 0.76%, I'm sorry, compared to a 13.97% for QQQ. So the benchmark relative was minus 13.2%, and the drawdown was 6.6%. Let me show you a graphical representation of that. So we're going to look at April 26, which was the worst month for Nasdaq. And the green line represents QQQ, the blue line represents JEPQ. Bottom line, they both had a drawdown, but JEPQ had lesser of a drawdown compared to QQQ. QQQI actually did the worst out of the four for this period. Your $10,000 would have ended up at $9,729 for a portfolio return of negative 2.7%. and a benchmark relative of negative 16.7%. The drawdown was 10.5%, and here is a graphical representation of it. Now, looking at the green line, that's QQQ, QQQI is in the blue. So they both had a significant drawdown on April 26, but as you can see, QQQI had the greater between those two. In my opinion, the most interesting result was GPIQ. So taking a look at how it did, you would have exited with a balance of 10,518, and rounded up, that would be a portfolio return of 5.2%. The benchmark relative was 8.8%, and the drawdown was 8.6%. Now, the most interesting aspect that I felt was the graphical representation of the drawdowns, and it's going to be hard to tell which is which. So QQQ is in green, GPIQ is in blue. Notice something interesting. They're actually pretty well correlated together. Even in April 26, when it had the maximum drawdown, they're actually pretty close together. So this, I felt, is quite relevant in the discussion we're going to have when I summarize these four ETFs. So interestingly enough, TDAQ, which actually has the highest yield of the four, at least for right now, did not do too well when it came to increasing your investment capital. And also when you look at the drawdown compared to its peers, it actually did not do very well. There were only two ETFs in that backtest that actually had a good performance. One was JEPQ, and the clear winner, even though it actually has the lowest yield on paper, was GPIQ. It had the highest increase in capital. And not only that, when you look at the benchmark relative to QQQ and you look at the drawdown, it actually matched it pretty closely. So at least compared to its peers, among these four Nasdaq-focused income ETFs, I felt that GPIQ is the clear winner, and JEPQ came in second best. QQQI did not do as well, and even though that's the case, they do offer some tax advantages that you might want to take a look at, simply because long-term, and especially at the higher tax brackets, that's going to come in significant. But all things being equal, the acid test was GPIQ. That was the winner according to the backtest. By the way, I made a video on the most recently launched income ETF that focuses on SpaceX. Take a look at it here. Thanks so much for watching. I'll see you in the next episode.